Ladies and gentlemen of the crypto space, we're live at 11:53 a.m. on a Monday, March 29th, and I possibly have the worst shirt on today for streaming on a green screen. But I'm not going upstairs. I got to get on the stream. I don't have time for that. I got too much stuff going on. Crypto risk off is so darn profitable. That's what I want to talk about because there's obviously systemic risk. And it doesn't just mean inflation, they're going to print and everything's going to go up in value. No, the entire system is positioned to deflate. And if you follow contrarian thinkers like Brent Johnson and Jeff Schneider and Stephen Van Meter, they lay it out. And the arguably, and the way my mind sees it, is these periods of deflation will be exactly like we saw in '08, like what we saw in March of last year. There'll be periods of deflation, and then the Fed steps in and just jams liquidity everywhere and rectifies it in a couple of months or a couple of weeks. But there'll be significant downside price action across the asset space, and it's in such times the dollar outperforms. Think of the dollar as an asset. You want to buy dollars, so you have crypto assets which you could use to buy dollars. You know, adjust your perspective, adjust the way you look at this stuff, and the dollar is just something to buy. People run their lives around dollars, but I tell my wife, "What do you think? Maybe we should buy some dollars this week." And she's like, "What?" And I'm like, "Yeah, honey, change your perspective. Just another asset class. That's all it is. It's another thing that you could buy. Just what are you buying it with? And which would you rather have?" And it's really about buying assets that are outperforming. And there are many instances where the dollar is an asset that will outperform other things. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam! Let's pop it over to the main screen and see who's in the stream. Got Stays in the house. Yeah, yeah. Lewis, my brother's in the house. Brought to you by Change Angel. Whoop, whoop. Yep. 15 people in the stream, 2 likes. We can do better. So I got Ethereum USDT up for the moment. It's been in this large symmetrical triangle for a fair amount of time. We're talking about almost a month at this point. It's relatively large. Now, symmetrical triangles are break direction agnostic, meaning they break to the upside or the downside. But they tend to break in the direction of the prevailing trend, and the prevailing trend is obviously significantly bullish. There's a couple of things I've been looking at lately, and first and foremost is Bitcoin pretty much denominated by M1 monetary supply. This was a great Twitter post the other day, and this really highlights the state of the Bitcoin market. Notice that the RSI on the monthly, we're talking about the monthly chart. This is big macro here, boys and girls. And this was the big boom in 14. That was a giant explosion in price in 2014. And you guys think 2017 was big? February 2018, here's your RSI at 100. We got nothing yet. There's nothing that's happened with regard to Bitcoin as of yet. We haven't even breached 70 RSI to the upside. We're still below, was that 2019 tops, M1 denominated, about 3.45, 3.63 at the numeric point. So there's been no breakout. This thing could just be explosive. 6, 7, 8, 9, 10. 10, you're talking about 300% increase in price point, US dollar denominated, if you're considering M1 at a 10. 10 would be we're at 3.19 now. So it's about 3x, give or take. We've seen nothing on the RSI above 70. That's massive. Now, if you look at Ethereum USD, boom, and M1, it's not as bullish. So I'm actually more bullish on Ethereum. Can't see it. We'll see it on the daily. Maybe on the weekly. Sometimes it doesn't want to draw, but here, look at the RSI. So we already had a spike. We can't go to the monthly because Ethereum is too new as compared to the Bitcoin. There's much less data, but we were at 100 we spiked up towards 100 on the RSI for the monthly already for Ethereum. And we already had a pullback. So clearly Stoke RSI is oversold. Now we got to have another rip to the upside for Ethereum. But the chart is actually not bullish as compared to Bitcoin. Bitcoin is extremely bullish. We haven't even breached 70 to the upside, as I said. So worth noting that with Ethereum, as I mentioned, I'm more bullish about Ethereum than I am Bitcoin. I think Ethereum will outperform Bitcoin, in which case I have less Ethereum in the portfolio as compared to Bitcoin. The goal isn't to make as much money as possible. The goal is to have a balanced portfolio. So for Bitcoin to make the same amount of gains as Ethereum, you need more of it in the portfolio. If Ethereum goes 5, 6, 7, 8, 10x on the money, you're going to need more Bitcoin because I don't think Bitcoin's going to go, it might go 10x on the money from here, and Ethereum might go 20x on the money. But in order to compensate and keep the portfolio balanced, you're going to need more Bitcoin than Ethereum because the goal is not to make as much money as possible, but to balance the portfolio at all times. That's the name of the game. Who else is in the stream? We got John jumping in. Wonka Church on Monday, Tuesday, Wednesday, Thursday, and Friday. Just saying. Liquidation event, Catalyst, Archegos. Yeah, well, all that stuff that we were reading about in the headlines. The SLR has been reinstated. Uh, the markets, the equities markets, are leveraged to the. How do they say it? They're leveraged to the tits or something like that. One of those phrases. Uh, it's max leverage. These boys are completely operating in an under collateralized world. Margin, margin, margin. Crypto, Mark Cuban actually understands it quite well. The entire crypto space right now is over collateralized debt. There's no systemic risk in the crypto space in the case of a liquidity event because collateral will be liquidated to make debt positions whole. In the legacy financial system, under collateralized debt, if the debt position defaults, that results in capital destruction, which is a deflationary pressure. In the crypto space, if capital defaults and someone doesn't repay their loan, people provided collateral to facilitate the debt position. That collateral will be liquidated to make the debt whole. The debt doesn't default. So a liquidity event, somewhat in the crypto space, doesn't result in systemic risk as compared to what happens in the legacy financial system. Over collateralization versus under collateralization. Bottom line is, I don't trust the legacy system for shit. I think these people are a bunch of scumbags. It's a harsh word to say, but they take risk, and their risk hurts people. You know what I'm saying? And that I don't trust them. Greedy motherfuckers. So that really gives me the fuel and conviction I need to structure the portfolio as I do. Um, Squatchy's in the house. What's up, fam? John McQuire, how do you enter ticker on BTC USD M1? Here's the ticker. You'll have it in the video, so you can rewind the video. So you pick your. It's the same for Bitcoin. You pick your exchange and Fred M1. So it's basically just do this. You type in BTC USD, you'll get a list. I go to the first one, / M1. It'll give you Fred. You select it. You press enter. Bing, bada, boom. That's the way that works. John McGuire, hey, Noah, researching KeeperDAO this weekend. Do deposits of stablecoins and KeeperDAO have a place in a diversified portfolio seeking yield? Yes, they do, actually. So I actually am quite sparse on KeeperDAO exposure because Curve is just so damn lucrative. Um, the Curve asset has been appreciating significantly. It's up 1,000% from its lows. Rook has yet to gain traction as such and doesn't have a place in monetary policy. Rook's monetary policy is the king inflationary. There's no incentivized supply disruption, no burn components, no deflationary pressures. There's no doubt. So no locking, no staking, none of those characteristics that create the appreciative force, the deflationary pressure. So for myself, yes, the yields are nice, and 30% is absolutely incredible, and that's exactly what we're talking about on the stream today, where dollars have become an investable asset class. Dollars are debased about 15% per year, give or take, according to the last Chaplin Index data before they went offline. Um, Yeah, that's anecdotal. It's obviously an extrapolation from the last couple of years, and we had a massive money print last year, so I would imagine about 15% is a logical and reasonable statement. So 30% is incredible, but the yield is denominated in Rook. So if you want to play a risk-on play with Rook and you're expecting it to significantly appreciate, that's a great place to throw USDC and stablecoins. You're basically albeit there's no interest on the stablecoins. So Curve in that regard is just incredibly lucrative. I'd show you guys my Curve portfolio, but I don't want to expose some of the full extent of some of my the size of some of my positions. But you're talking about like the compound pool is 10%. You get 10% APY on the compound pool, and you're talking about 30-40% incentivized yield denominated in Curve. So you get a yield on your principal and incentivized yield, whereas with Keeper Now, you're getting just incentivized yield and not necessarily yield on your principal yet. So the yield on your principal at Curve is extremely lucrative, almost accounting for monetary debasement running at 15%. And your incentivized yield denominated in Curve, which is an asymmetrically appreciating asset that is part of a well-rounded monetary policy that has incentivized the supply disruption, producing deflationary pressures. Curve is up 1,000% on the money from its lows, more than 1,000%, probably maybe 1,100, 1,150, 1,200% at this point. I think its lows were around 25 cents. So your yield on Curve positions is denominated in an asset that has been outperforming. And as I like to say, I buy assets that are going up in price, which is quite contrarian in many regards. People like to buy dips. I buy breakouts. Uh, People at in times of fear sell when an asset's going down, and technically I do as well, but it's not because of fear. I liquidate assets that are going down and I apply them to assets that are going up in price. And interestingly enough, the easiest asset that's going up in price, if an asset is depreciating, is dollars. If an asset is going down in price, that means dollars are outperforming that asset, and dollars are an asset unto itself. People think of I would love everyone to try that thought exercise of getting away from dollars being what everyone revolves around. If you have Ethereum and Ethereum's going down in price, you could use your Ethereum to buy dollars because dollars are outperforming. They're going up in price relative to Ethereum. It's all relative. This is one of those streams I did a bit back was Einstein and general relativity, and these phenomena are absolutely real. It's all relative. Because our financial constructs and manifestations of fundamental physical phenomena. It's the truth. So Ethereum's going down. That means dollars are going up. So you take your Ethereum, you use it to buy dollars. Food for thought. Food for thought. Um, I got title up here. Thanks, Lois. What's it doing? I think it was up like 80% the last time I looked. Is it still going? My goodness. I was a small position. It was 51%. 30 mil. I mean, this thing could easily do a 10x fully diluted is always in the billions, especially for the AMMs, and 300 mil for a market cap is relatively tiny. And a 10x on the position that I supplied, that's exactly the type of position I tell folks are quite reasonable. Small, that's about 0.2% of the portfolio. And if that goes 10x and becomes 2% of the portfolio, boom, that's what I'm talking about. That's a win. I didn't need to make $1 million off it, but if I'm able to turn $2,000 into $20,000, I am not complaining. Wonderful. What else are we talking about? ARFs in the house. Hi, Noah. What are your thoughts on fixed rate products like bond and MPH? I don't like time involved in my value allocations, especially in the volatile crypto markets, which is exactly why I just have no interest whatsoever in HEX. It's quite lucrative, but the time locks warrant that a liquidity event will occur when the average locked position is released. So if let's say 1,000 people create a bond today on MPH, and their bonds mature on the same date, the odds are there's going to be a bit of a liquidity event where people are going to be liquidating for their profits. So that means you're going to have a significant buy side disruption where there's more sellers than buyers. And that's the way time really kind of messes with the system. Now, I know yield curves and traditional finance deal with time and just, the crypto space, I find myself I fancy the real time now spot price, and rather than speculating out over time, considering the volatility in the equities, broad legacy, the macro financial system, but the crypto space especially is extraordinarily volatile. So I definitely don't want to be locked in position in the crypto space. Food for thought. They will have a go this cycle. Yeah, MPH, Meta's another big deal with IMUSD and so on and so forth. That's a heck of a protocol. They're undervalued in my opinion. It's volatile. I don't have a position in them. I wish I did. It's just something I don't want to take the risk on. I have the assets that I've chosen to take risk on, and I don't feel a need to take on that additional risk at the moment. So, 30, 30, 35% of the portfolio right now is US dollar stablecoins that are producing somewhere around 40% interest. And a good portion of that, half of that 35% is on Curve, and Curve's generating about 40-50% interest. And the yield is denominated in Curve. So I'm just building a Curve position. And frankly, in 1 year's time, I will have doubled my Curve position. And I expect Curve to significantly appreciate as time goes forward. There's too much supply disruption. And a similar effect is occurring with Bancor. My Bancor position is about 35-40% the size of my Curve position. And if Bancor sticks, it's going to outperform. Bancor is a heck of a protocol with a great, stable, fascinating monetary policy. And that's pretty much what I could say about that at the moment. Um, an example, curve locket, deposit locked VE curve to compound pool for boost, add liquidity, comp pool to get boost. So, yeah, um, that's exactly the way curve works. So you have to have a VECRV position to boost the yield, the incentivized yield that the pools emit. So you guys saw my curve position, my VE curve position from over a year at this point. I bought that thing down to like 25-30 cents a pop. That was a heck of a good position. Speculative, but I had my conviction, and that's the way this game is played. Zach's still a little confused on how the CVB boost on YLALP. Do you have to buy CVP and stake it? Yeah, fine. All right. 39 people on the stream. Tell anyone. So I got my YLA and USDC with CVB boost going on. This thing is makes a fortune. It makes a fortune. Let it load and you'll see. So I got a bunch of CVP. I have like 25 grand worth of CVP boosting this position. $291,000 worth of YLA and USDC that's pulling in 40 grand a month denominated in CVP. So that's crazy. Um, Now, a little concerning is that the CVP is locked, which means it's a liquid, which means there's potential for a liquidity event when stuff starts to unlock. But this thing's pulling in 164%, and what's crazy is that they're dollars. You're talking about YLA being a derivative of urine vaults, which are derivatives of curve positions, which are derivatives of dollars, and it's pooled on Sushi with USDC, which is dollars. So this entire position is yield on dollars. Now, all you have to do is be able to swallow the risk of your of the smart contracts. But in my opinion, Curve has been de-risked. They got billions of dollars in custody at this point, and you can get if you are not able to stomach the risks of the positions. What you can do is you go over to Armor Finance, and you get a position on Curve. You get a position, insurance position on Urine, and there's no insurance position on Power yet. So that's just food for thought. But it's not a lot of capital for an insurance position on Curve and an insurance position on Urine. You're talking about like 3% of your position size. Food for thought. Food for thought. Um, so there you go, Zach. Those are some juicy details. Imagine the curve positions. Arf, my man. The great Dadsby, Noah, what's the first feed you look at in the morning? I'm my own feed. I look at Twitter and I look to see what's going on in the world. I look on CNBC. I like the headlines. I look at the indexes. I look at ES, which is S&P futures. I take a look at the DXY, see what the dollar's up to. It's an index. I don't really look at fiat like forex pairs specifically. Um, I look at the 10-year interest rates on the 10-year. I find that, but look, this morning we had a significant liquidity event in the equity space. There was a big sell-off. Bonds were selling pretty hard. Precious metals, particularly gold and silver, were selling pretty hard. So, I don't trust the volatility. I don't trust them. I don't trust them. This is exactly why I have these dollar-denominated positions. As much as crypto has been hot today, we got some serious gains going on in the volatile crypto assets, Bitcoin and all the fun stuff that we own. But I don't trust how the risk that's in the space. Hello on Big D on MetaMask BNB. How can I send BNB to Binance? So Binance is absolutely the most annoying platform, BSC, that I've ever experienced. So I got a lips up because I own VECRV, and I'll show you guys. These guys are just giving away money. This is actually a fun little example I'll give you guys. So I flip over to Binance, and these literally this is all free. I someone gave me $2.50 worth of BNB, and it just accumulates. Like I'm getting BUSD, which I sell for BNB. Let me refresh this. It's more at this point. I think EPS is going for like $3.25, $3.50 at this point. Let's see. It's probably is it up yet? Yeah. Is it $3 still? Obviously, $5. Wow. Oh my God. This thing is a money printer. That's crazy. They literally dropped me like 2,700 EPS, and the initial drop was like at $22 in EPS. And this is going to be running every week. There's going to be an airdrop like every week for the next year. So this is like thousands of dollars a week. This is crazy. So I'm locking it up. I'm just compounding it for 2,600% interest. So I literally get another 100 EPS a day, give or take, or something like that. And it's BUSD, which I sell for BNB, and it's literally from $2.50 that someone graciously offered me worth of BNB. I was able to access this EPS drop, and all this capital is just literally coming out of thin air. I'm just going to compound it. Whatever happens, happens. If Binance locks this doesn't even require a bridge because there's enough liquidity that if there was ever an issue with access to the BSC Binance Smart Chain platform, there's enough decentralized exchanges to be able to convert this to REN BTC and extract value as such. But in any case, there's no risk here because I didn't apply any capital to it. This is all freely provided capital. Um, Interesting. Well, they got me to play around with it. $2.50 of a gift provided access to all of this. Um, How can so BNB? I have no idea how to transfer cross chain. I've tried. I've tried the transfer BNB. I've tried the. I can't even buy BNB. I have no idea where to buy it. Binance US apparently sells it. I don't even know because there's a difference between BNB and like the BEP20 that goes on Binance Smart Chain, which is basically like Ethereum. Um, So there's a great deal of complexity, and it's quite annoying because it's centralized, and the decentralized options for getting value cross chain are quite limited, and the liquidity is basically next to nothing. And the centralized Binance bridge is basically completely shut down for U.S. citizens. It's really not worth the effort in many regards, in my opinion. The only reason I'm even interested in is because the VE curve airdrop. Um, anyway, so that's the name of the game. Um, you pep Peption, you ha you guys seen elongate only 4 days now was based on a tweet from Elon Musk himself. I have not. I mean the token, by the way, from Pancake Swap. I have not. Uh, the only thing I have any interest on Binance Smart Chain is EPS, and I use 1 inch, and 1 inch basically swaps using Pancake Swap. Um, so EPS, BNB, BUSD, that's the only thing I really care about at all. RJ, hi Noah, learning a lot from your streams. Have you explored the Luna ecosystem? Yeah, Luna's cool. Um, I don't have much interest in it, and I'm happy for folks that make good money. It's been up a huge amount of percent. I just don't have much interest in it. Brendan, you have stunning positions on Curve and Bancor. Totally deserve it, bro. Thank you. This has been a heck of a year. And I started with very tiny, relatively tiny positions. Um, my Bancor, what you guys have seen over the last months in my Bancor position, that's what I started everything with. Like I saved for years to get that kind of capital into the system. Probably and 2019, end of 2019, and then everything went crazy in 2020. And at this point, I'm trying to protect as much as possible and grow risk adjusted returns. So things are pretty interesting. Thank you, Brendan. It's been a long road and it's not easy. And I hope that I teach you guys how to protect the value that if you're lucky enough to make, um, because that's what the big boys do. The big boys don't want to make as much money as possible, and when they do, they get fucked. Like what's happening today with the equity space and the over leveraged players. What did he lose $15 billion? He lost $15 billion. He was liquidated. Stop gambling. There's no need to gamble. When you can make 40% on your money, the crypto space literally is the rebirth of the 1960s where you could actually save your money and compensate for inflation and monetary debasement and actually work and get ahead. So it's pretty interesting that you could be completely risk off and build wealth because of the types of products that have emerged in the DeFi space. Make the form BNB to BEP20 is a huge headache. It's impossible. It's impossible. I tried. I've tried. I've used AnySwap. I've used Andre's multi-chain, and AnySwap has no liquidity whatsoever between like any DAI and any, and then you only have a certain amount of assets that are available on Pancake and whatever, and Spartan, and 1 inch aggregates them all. That makes it simpler, but the liquidity isn't there. Talking about massive slippage to try and get any value onto Binance. So the only reason I care at all about the Binance platform is because it's basically just free money just spitting out of Ellipsis protocol. So that's cool. Have I looked into opium? I've heard of it and it has caught my eye, but I'm not overwhelmingly interested in it at the moment. Big B, sending BNB from MetaMask to Binance US. Do I have to use the Binance one? No, just use MetaMask. So MetaMask BNB is going to be on. Is that on your? It's on Binance. You see how I go at the top to Binance? You have to change your network from Ethereum to Binance. It's a completely different blockchain. So your BNB, like, look, here's BNB. I have BNB in my Binance network connected MetaMask. So that's how you access and manage your BNB. And then you could send it to another network. But I don't think I think that's how it works. So that's how that works. What do you think of hard hollow chain and dent? I have some family back in the day that had hollow chain and dent. I don't know much about, but hollow chain's interesting. The problem is with when you talk about other blockchains, you need the interconnectivity, the interoperability. One of the more interesting projects is definitely a quant. I don't have a position, but I think Flare is a big deal. Interoperability and bridges and liquidity and this type of infrastructure is everything, and it's going to be huge in the coming years. Look at the trouble getting value to and from finance. Look at the trouble getting to and from whatever, even just Matic or the L2s. Loopring, well, it's relatively simple for Loopring and Diversify. Um, those are quite mature, but the other L2 networks are quite problematic. And that's exactly why Andre's building the multi-chain. The problem is the multi-chain needs liquidity, and it also needs liquidity in assets that are readily available across the space of the specific chain. For instance, I could easily get DAI to any DAI using the multi-chain, and I get the any DAI onto BSC, but then there's no liquidity for any DAI to anything. So I can't get DAI. I have any DAI. I want DAI, or I want maybe any DAI to BNB. There's no liquidity. So that's why it's quite frustrating. It's all about liquidity and interoperability. It really is. Crypto, no, my man, how you doing? The free EPS is nice, right? I'm not complaining. I have no interest in uh, realizing the gains. I have interest in just compounding them. I don't. I do what I do on Ethereum. I don't need to move any of this over to Ethereum from BSC. Just let it do what it does. If Curve is extremely bullish in my mind to the point where I talk about it the way I do, and I have the positions the way I mentioned, then Ellipsis should do something similar because it has the same monetary policy. In fact, this is actually a quite nuanced distinction with Curve's monetary policy and their vesting process. So this is actually pretty exciting. This is quite lucrative. 50% penalty to take your vesting interest early. So Curve vested it over the last year. So we still got vesting rewards, us early liquidity contributors. But here they're vesting it weekly for the next year, and you get a 50% penalty for taking it out early. So this is quite fascinating. I think the Curve platform and the monetary policy is very powerful, and they've done some interesting changes to it. And the only shortcoming to this is, unfortunately, it's on a shitty blockchain called Binance Smart Chain. That's the only unfortunate thing. But otherwise, the platform is really cool. Until China shuts off the electricity to the 21 validators and nothing works. How do we claim EPS if we have the E curve? Yeah, you just go here. You go to this page, ellipsis.finance.stake EPS. You connect your MetaMask to Binance Smart Chain as compared to Ethereum at the top, like I've shown you. And you will see a button that says, like, check your address. And you'll see EPS being dropped to you right here. Ellipsis.finance stake EPS. That's how you do it. Crypto Gnome, same. Compound it and earn it. Just compound it. Folks are trying to realize gains. You don't realize how much taxes you owe. Now, it's arguable it'll take years for the IRS to figure out the mess, but I'm paying full taxes. I have no interest in any risk. I am the most risk adverse person you'll probably ever hear talk to you. Zero interest in risk. So I will be paying every damn dollar that I could calculate that I owe the IRS. It's the only way for me to sleep at night. And so if I don't have to realize gains, I'm not going to realize gains. That's the bottom line. Yeah, crypto gnome. Shitty thing is it's not decentralized. It's just maximum risk. Well, BSC is a EVM. It's Ethereum, but except proof of stake validators. But the problem is, it's not like there's 10,000 validators around the world in every single country. So if the couple of the 21 validator nodes they have over in China get shut down, you got still 9,000 validator nodes between Australia, the United States, Canada, Britain, South America, Africa, Central Europe, Eastern Europe. There's no validator nodes. So the system has risk that it can be turned off. Ethereum can't be turned off. It has reached critical mass decentralization where there's enough nodes around the world and significantly spread out around the world that you can't take down the whole network. There's thousands of hundreds, if not thousands, of countries that Ethereum nodes operate in. But for Binance Smart Chain, there's only one country and one company. So that's what it is. Have you calculated the API for EPS where it's better just to let the vesting expire and lock it? Well, compounding. Compounding is the most powerful force in the universe, according to Einstein. So claim your EPS and compound. Here, you guys want to see a transaction? That's how I'll end the show today. I'll run it. 16.99 EPS at $5 a pop. I'm not complaining. That's like 4 hours worth of vesting at this point, or yield. I mean, it's as simple as that. Give a little confirm on your hardware wallet. There you lock it up. And you lock it, boom, 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 and then you go over to 1 inch, BSC mainnet, BNB, you go over to the exchange, then you take, oop, then you swap it, and you go, don't I have BUSD? Yeah. Then you turn your BUSD into more BNB, so you swap that. Give it a second. Okay. So it's as simple as that. And literally, I think I started with like 0.025. Look, I just lost value on that transaction. So you got to wait for a little bit more BUSD to accumulate. But I started like point 0.2 something BNB, and now I'm up to 0.05, which is pretty cool. And I would imagine if I just let this sit, I could just accumulate. Have like 1, 2, 3, 4, 5 BNBs. BNBs. Do I really have any interest in this? Of course not. At some point, I'll sell the BNBs for Ethereum or something, or USDC for that matter. But you need BNB for gas, and that's the whole point. BNB is basically Ethereum in that regard. Yeah, that YLA pool is crazy, boys and girls. It's dollars. It's dollars. That's crazy. You're talking about deflation protected with the yield in an inflation sensitive asset because CVP has the potential to significantly appreciate depending on popularity. It's a potentially asymmetrically appreciating asset. Let me answer the rest of the questions and I'll shut down the stream for today. Crypto Gnome, CZ says they're adding community nodes soon. Cool. Let us see when they get up to 5,000 or 10,000. That'd be nice. Some interesting announcements. Rook, also this week. Yeah, I saw the announcements of the announcements. I know what you're talking about. I saw that. It's pretty cool. I love Rook. I love keeping down. It's cool. I'm just not risking my capital. I was buying it at $65 and I sold it like $800 a good portion of profits. The Visa announcement today is crazy. Crazy, Arf. Further cementing USDC. USDC is a big deal, and GUSD is a big deal. Curve's an even bigger deal. Scripts in the house. Always a pleasure, my brother. Welcome, welcome. Um, Well, I cover the topics that I wanted to talk about: YLA, USDC, curve pools, compound your gains, have stable coins produce yield in transaction fees, uh, 10, 11, 12% on curve. No one's complaining. And then your incentivized yield is overwhelmingly compensating for the monetary debasement and inflationary pressures on the broad financial system. So you don't necessarily have to compound that yield if you want to into dollars. You could just go for Yearn vaults or YLA for that matter. And that's exactly what it does, auto compounding on dollars. But frankly, a position on curve, you're going to get the yield denominated in CRV. And CRV is a potentially asymmetrically appreciating asset. In the future, right now, curve's about 3 and change. Imagine it at 30. Imagine it at 300. So curve is potentially a massive systemic component of a future banking system, facilitating liquidity, basically Forex liquidity. It's what it is. It's the Forex of the crypto space. All right, let's wrap it up. Montana, you're very welcome. Ryan, for sure. Thanks for the wisdom always. Cheers. 12:34, 47 people on the stream, 20 likes. We can do better. Monday, March 29th. Tell everyone to subscribe. I wish you all a wonderful day, and I will see you all tomorrow. Peace.